order to know when the market is about to change a trend, okay? Because as a trend trader, you don't want to be trading blindly, okay? A lot of us get caught up with the trend. The trend looks so fancy, looks so nice, and then we don't exactly know when the trend is really about to change, and then we literally get caught up, with the trend reversal. Imagine trying to buy in a downtrend. Okay, you really don't want that. So, as a trend smart money trader, okay, guys, you want to be able to identify when you want to be able to identify certain market movements that indicates that the market is about to change in trend. Okay, so I'm going to take you from the first one. The first one is, you guys need to really read this book. It's so funny and interesting. Like, look at this guy. This is absolutely crazy. Trust me. Read every chapter I go over with you guys. Please ensure to read it word for word, because it's like a story. It's really interesting. Okay. Now back to what I was saying. So the first one I'm going to be talking about is known as the double top. Okay. So one of the key characteristics of a trending market is that the market must always come and make a higher high. So let's say this is an uptrend. Okay. This is an uptrend. The market pushes all the way to the upside, and then we pull back. When we pull back, we're supposed to come and make a new higher high. But in this case, the new higher high didn't form. It came right back into the previous high and just stopped. And then this market tried to make new highs, okay, but that was unable to happen because this market came into previous highs and just stopped. Once it stopped, you can see that this market started to bleed all the way back to the downside, okay? Now, the number one characteristics of the trading market is market needs to come and make higher highs. Once this happened, this basically indicates that there's trouble. There's trouble, guys. There's trouble. And when there's trouble, the trend is about to change. When there's trouble, you want to be careful. Okay. So let's say this market started all the way here. We push all the way to the upside. We pull back. We came into this level about here. Looks like a Fibonacci, because if I drew my Fibonacci from swing low, swing high, this looks like a pretty decent Fibonacci level. Started pushing all the way to the upside. You're expecting the market to come and make new higher highs so that you can draw another Fibonacci from swing low to swing high, and so on, and can complete the trend, blah, 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 what have you not, all the way to the upside. However, that was cut short because the market failed to put in a new high. We failed to put in a new high. So what that tells me is that this bullish momentum has pretty much died out. And, the market started to pull all the way back to the downside. Now, once we come back into this neckline, okay, as you can see here, well, technically the market is still kind of in an uptrend, but as long as we trade above this neckline, we're fine. But ladies and gentlemen, the moment we break this neckline, as you can see what happened on the right hand side, we did break the neckline, and as you can see, the market reversed all the way to the downside. Now don't forget, you're probably buying somewhere about here, because don't forget, you swing low, swing high, pull back into Fibonacci support and trend line, you buy here, we push all the way to the upside, and then for some strange reason you don't understand how trend reversals work, and then you're still holding on to your buy somewhere about here. Well, let me take it all the way here. You're still holding on to your buy, which is somewhere around here. And then the market you're in some serious pips in profit. And then the market starts pulling back down. Gets here. You're pretty much back to break even. But because of your greed, because you've seen all the green good figures in your bank account, you tend to hold on to this trade. And this is exactly what happens. You ended up being stopped out for a loss. Okay, now it is a taboo for you to be in profit and get stopped out for a loss. It's a taboo in this. It's a taboo where I come from. It's a taboo in this academy. It's a taboo anywhere else. If you're a professional trader, it's a taboo for you to be in green and then you get stopped out for a loss. Okay, ladies and gentlemen. So you really want to look out for this kind of trend reversal patterns. Now, this usually happens when we're probably approaching some form of resistance, or trend line, descending trend line, or resisting trend line. Okay, so the market will probably peak it, pull back, and go and peak it again, and then we start bleeding all the way to the downside. So ladies and gentlemen, these are things you need to watch out for whenever it is you're in a trade. Okay, this applies for when you are in a trade, as well as the overall bias of the market. Actually, I use this for the overall bias of the market. So let's say we have a very big trend, okay? And then in this big trend, I'm seeing some nice pullbacks within these candles. Let's say these candles are weekly candles, okay? I'm seeing pullbacks within these candles. I'm seeing pullback within these candles, and I'm buying. Bam, we pull back, and then the market starts to push out, and I'm buying, bam. And then I zoom out on a higher time frame, and then I say, guys, if you see this kind of chart setup especially on the weekly, okay? Now, guys, I usually look out for stuff like this on the weekly time frame. If I see something like this on the weekly time frame, best believe this is what's going to happen. So you want to watch out for this on a weekly time frame, and when this does happen, you want to position yourself for a downtrend market so that you're steps ahead. If you see this, let's say you are in a bullish movement, you're buying, and then for some strange reason you haven't traded a bit because you can't really understand the price action, and then the market starts to push all the way to the upside again, and then we get stuck here, and then you can see this double top, and then we start to push all the way back to the downside. Now, ladies and gentlemen, all you need to do is wait for the break of this neckline. Once we break it, your brain must flip. Okay, it needs to flip from a bullish perspective to a bearish perspective, so that you can start looking for potential sell opportunities, ladies and gentlemen. So that's double top and double bottom. Okay, now this double top, let's take it over double bottom. Okay, cool. Now, a double bottom, a reverse is the case. Double bottom basically is a double top flip upside down. So the rules still apply. Let's say they were coming in for a downward movement. We pull back to rest. We have a Fibonacci from swing high to swing low. You see this really nicely. You sell, and then the market gets here and it fails to take out the previous lows. Red flag. And then we start heading all the way to the upside. Close that trade out right about now, because you know what's going to happen. This is going to happen. Okay. So once we get here, okay, and we break this neckline, don't forget you're in a downtrend, you're selling, you want to make money you want to make money when the market's going down, and then what happens, we get here, you fail to realize, or you don't understand how to use trend reversal signals, and then the market pushes all the way back here, and then we get to the neckline, and then we break it and get stopped out for a stop loss. You don't want that, okay? What happens is, what I do, and what I teach most of my traders to do, which I'm going to be teaching you guys on the trade execution aspect of this course, is that whenever this market comes into this is known as a 100% retracement, okay? Once we come back into previous resistance and we fail, don't forget, guys, one of the characteristics of a downtrend is that we must continue making lower lows and lower highs. This has failed to continue in that sequence. So what does that tell you? That tells you that, guys, okay, we failed to continue in that sequence, so we can't head lower. We stop here. Once the market can't head any lower, you have no business being in sell trade, because you know what's going to happen? This is what's going to happen, and you get stopped out for a loss. So, ladies and gentlemen, this is a double bottom. This is a double top. Okay, this is just pretty much flip upside down, vice versa, flip upside down, whatever it is you want to call it. Now, I have some real life examples here. Now, this is the euro dollar. You probably can see. Let me try and see if I can zoom in, or I can zoom that in. Let's see. I can't zoom that in. Can I? Let's see. Something like, oh yeah, absolutely fantastic. Let's see if we can zoom that in. All right, cool. So you'll realize that this chart is on a weekly, you see, Euro USD weekly time frame. This double top that was formed here, as you can see, is neatly highlighted. Once this double top was broken and we broke the neckline, as you can see, this is a neckline right about here, because this is A, B, C, Fibonacci, push to the upside, bam, we couldn't break it, and then we started bleeding. The moment we took out this neckline, guys, look at how this market just dropped all the way to the downside. Now, this is 1,500 pip drop. 1,500 pips, guys. If you were trading just 10 pounds a point, you'd have made 15 grand on this trade. Obviously, this took a while for it to come all the way to the downside. But hey, guys, what I'm trying to say here is, for something like this that's on a weekly time frame, obviously you're not going to be wanting to put your sell orders here. What this will help you do is basically help you anticipate. You want to anticipate the direction in which the market is going to be heading to next. You want to anticipate the potential next trend. Once I was able to identify that, we've broken the neckline and we started making lower lows and lower highs, lower lows, then I was now able to scale to a lower time frame and now look for very decent pullbacks, which I'm going to be teaching you. Have we covered decent pullbacks in the previous chapters? No, we haven't. Okay, so which I'm going to be teaching you in subsequent chapters. Okay, I will then now want to look for potential pullbacks because these are weekly candles. Each weekly candle has about 7 daily candles, which has about a couple of really how many 4-hour candles? We've got a lot of 4-hour candles, which would have pretty much visibly pulled back while all of this was happening, and then you can now see a visible pullback on a lower time frame. And because the higher time frame has pretty much told you the gist that this market wants to pull up, you could have simply sold here for a very small stop loss and you'd have caught this entire pip, making a lot more than £15,000, because you could have been risking, because of how small your stops were, you could have been risking £50 a point. Okay, risking £50 a point, you're making you're risking $100 a point. I mean, you do the math, it's 150 grand. Okay, it's 150 bags you could have pulled from this market right about there, just because of a simple double top formation. Your ability to identify when the market was about to turn around. You first of all identified, the market has turned around, and then it starts making lower lows or lower high. Then your trend analysis kicks in. You now identify price action, you look for trend line, you look for support and resistance, you look for Fibonacci. Bam, you're down. You're selling. You see how you're bringing everything together. You're synergizing everything together. Ladies and gentlemen, this is actually so cool. This is why I always, sorry about that. This is why I always like to look out for the basics in the market, because that is exactly what works. Now we're done with double tops and double bottoms. I'm going to take you over to something which is known as a head and shoulder pattern. Now, don't get scared. Now, head and shoulder patterns are pretty similar to double tops and double bottoms. However, the formation is a little bit different. Okay, it's a little bit different. Now, head and shoulders. Okay, don't worry. After this, I'm going to take you over to real life examples so that you guys can have a fair idea of what exactly it looks like on a real chart. Okay, so head and shoulders. Okay. So head and shoulders, we're coming in uptrend, we're coming in nicely, coming in, and then we get here and we pull back. You know what happens every time we get here and we pull back? Next things next, we only look for Fibonacci, draw from swing low to swing high, bam, 50 fib, we buy. We buy and we come in and make a higher high. Now this is quite different from the double top, because we actually do come in and make a higher high. But when we do come in and making a higher high, probably you're taking out your profit. What tends to happen is that the market starts to roll over. And then you're thinking, it's about to make a higher low. But we don't make a higher low. Instead, we come in and then we collapse and make almost equal lows. And you're like, oh. Now you're probably confused, because this is not a double top. It's not a double top. Okay? We come into the neckline, we're making equal lows. And then the market starts to push out and you're like, finally, we're starting to push out and start again. And what happens? We get here and then we stall and then we knife all the way here. So this is known as a 3-crown formation. Head and shoulder, head to shoulder. Whenever you see this pattern also, guys, just know that there is going to be a change in trend, because this has violated the practical characteristics of an uptrend. Okay? We have violated the practical characteristics of an uptrend. And then if you are not careful, this is what then tends to happen to you: slice. So like I say once again, I like to see this happen on a higher time frame. So for example, from a daily, weekly, potentially a monthly, because once those bigger time frames print this kind of reversal, I simply wait for the neckline to be broken, and then I scroll to a lower time frame, and then I bring on my trend analysis. Okay, I start looking at the right hand side. My brain immediately flips. Okay, bearish, downside. I now start looking for lower lows and lower highs, because this is a weekly time frame. Don't forget, if you scale down to a lower time frame, it gives you more candles. Okay, it gives you more candles, and then you're able to see exactly what is happening. Okay, and once you're able to see what exactly is happening, your trend analysis comes into play. So what direction is it heading in, which is price action? So it's heading downward. We need to look for a possible way to draw a trend line. Don't worry, you might look like you can't draw a trend line here, but trust me, if you scale down to a lower time frame, you definitely can see trend line points to connect. So you want to look out for price action. It's heading downwards. You want to look out for trend line. Draw your trend line. You want to look out for potential support and resistance. And most importantly, you want to look out for very nice ways to draw your Fibonacci so that you can take advantage of that trade. So basically, guys, trend reversals are, in my own words, heads up. Okay, they give you a heads up when the trend is about to change. Okay, so now this is what is known as the inverse head and shoulder. You already know what inverse head and shoulder already is. This is when the market is heading in a bearish direction and then it wants to correct all the way back to the upside. So I'll take that again. We're sliding. We get here, we pull back, draw our Fibonacci from swing high to swing low, bam, 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 stop, we push lower. We try to see if maybe we're going to break the neckline. That doesn't happen. We act like we want to continue in the direction of the trend. That doesn't happen also, and then we come back here. Inverse head and shoulder, okay? Ladies and gentlemen, please do me a little favor. I want you to read on this chapter. Read this stuff. You see something about the market here, which is very, very interesting. So your ability to make money in this market depends on how much you know. Your ability to make money in this market depends on how much you know, okay? Baby Pips, shout out to you guys. You guys did really justice on these examples. I'm absolutely loving it. And I hope you guys are pretty much understanding what exactly it is I'm talking about. Anything you don't understand, read it word for word, and then you will grab what I'm saying, okay? It's not everything I can say, okay? It's not everything I can say. Now, as you can see, what happens to the inverse head and shoulder once we break the neckline and then we start pushing all the way to the upside. Technically, we're now bullish. I'm now going to be looking for price action, which is heading to the upside, bullish trend lines to the upside, support and resistance, and most importantly, Fibonacci to buy. Good. So, ladies and gentlemen, those are the chart reversal patterns that I usually use and we most likely look out for. Now, what we have on the right-hand side are other chart formations, which I want you guys to read on your own. I don't necessarily use them because sometimes they're not really as accurate as the two ones I just showed you guys, but yeah, do read up on them because you might see them, somewhere in the future, which might, yeah. This is also like, this was the euro dollar. This is the euro dollar example that I showed you guys, the double top formation. Now, the double top formation that gave birth to this 1,500 pip move that I was telling you guys about. Now, a rising wedge breakout also came in confluence with that. As you can see, this is known as a rising wedge. You can see, but I don't really think the rising wedge was the real reason why this market bled 1,500 pips. Really, actually, I'm not even going to lie to you. I think it was pretty much because of this double top. These rising wedges and stuff like that, I don't really pay attention to them. But please do read about them because, like I said, your ability to make money in this market depends on how much you know. So, ladies and gentlemen, that's all for chart reversals, rather trade reversal patterns. Okay, so I'm going to quickly dive onto the real live screen so that I can show you guys exactly how it looks in real life, so that you guys can actually see, so that I'm not just talking from the book. All right, guys. So now you're here with me. We're going to do this together. And I'm going to show you guys what exactly I'm talking about. Now we're on a weekly time frame, okay? We are on a weekly time frame, and pretty much I want to look out for key reversal zones that have really changed. You notice that every time the market is heading in a particular direction, anytime you want to change and head in the opposite direction, there must be a trend reversal pattern. So we'll start from here. Okay, we're going to start from here, which is somewhere about here. But do you notice something like a double bottom here, ladies and gentlemen? This market was pretty bearish. We pulled in here, pulled back, we broke this level, no double bottom, but we came in here, stalled here, tried to break it, double bottom, wasn't having it, and then what happened? We started to push all the way to the down. So this double bottom literally reversed this entire downtrend, and then we started to push back all the way to the upside. But because this downtrend wasn't really done with this downtrend, okay, although we use this to reverse the trend so that this immediate trend could rest, you notice that even when the market wanted to continue in its current direction, you can see how a head and shoulder still formed. Okay, you can see how a head and shoulder still pretty much formed. Okay. Yeah, and then we have the big head. Yeah, so you can see double bottom, change the trend, we headed to the upside, head and shoulder, sent it back down, started going. This was an inverse head and shoulder that was supposed to form. That's why I'm telling you guys, you see, when they write something in the book, you also have, that's why I always try and give you guys real life examples. Yeah, sometimes you see the reason why this didn't work out was because, if you remember when I was preaching about this is the neckline. We failed to break and sustain above it. Although this was a fake out, but because we failed to break above and stay above this neckline, this reversal was pretty much invalid. And what happened? We decided to flush all the way to the downside. We continued flushing until we actually found an inverse head and shoulder that actually held this market. We flushed all the way to the downside. You see left shoulder, head, right shoulder. What happened? We started to push all the way to the upside. We were pushing until we got to this point. As you can see, this is a double top. Pushing, we got to the double top. When we got to the double top, what did we notice? We noticed that this market got into this double top, bam, right here, and started to push all the way to the downside. So this head and shoulder that gave birth to this move came here. So the essence of what I'm trying to preach here, guys, is, let's say you got into this, you saw this really nice inverse head and shoulder. You start to see some really decent upward trends. Show you some real life examples. You start to see some decent trends. Okay, the market starts making higher highs, higher lows, and then you're now seeing a high. So this is a higher high, higher low. Market makes a higher high. Then you draw your Fibonacci from here to here. You draw your support, resistance, blah, blah, blah. You draw your Fibonacci from here to here, pulls back. Really nice buy opportunity. You buy. You're making all this money. And then the market pulls back. And then you do the same thing. You do your support and resistance from here. You do your Fibonacci from swing low to swing high. This nice confluence here. Because really and truly, if you draw this again, you realize that this trend line actually held somewhere about here. But I'll take this down right about now, so that I don't have too much on my screen. So you realize everything is looking nice. But this one, you buy. But then we get here. And then what happens? We get here and then the market fails to break above it. A lot of people, just because you've been making so much money, you want to keep on making money, and then this happens, and ladies and gentlemen, we start to collapse. Not only do we collapse, we also break that trend line that was holding in, and then the market starts. So, as you can see, this head and shoulder has given birth to this downward momentum, okay? And I don't know when you're going to be taking part in this course, but I'm pretty certain that the pound is going to roll over all the way to the downside here. I'm pretty certain that that's going to happen. Okay, let me just do some technical analysis real quickly. Give me a real quick moment. Okay, I do believe that it's going to roll over all the way to the downside somewhere about here. So, ladies and gentlemen, these are the very few examples that I can show you so that you don't get bored. If I see any other examples, I'm going to be dropping them on my YouTube channel. Don't worry. All of this, I just want you, the essence of this is for you guys to have a basic understanding of how the market works, okay? The more you start to practice this stuff, the more you start to try and identify it, okay? The more you start understanding. It's like riding a bike. It's like playing pool on a pool table. The more you play, the better you become. And the more you start to watch me do my thing, the better you also become as well. So, ladies and gentlemen, this is trend reversals for you in a nutshell. I hope you enjoyed this aspect of the course, and I'll catch you guys on the next chapter. All right, guys, God bless you, and so